On February 26, 2022, 2 days after Russia invaded Ukraine, the United States and European Union made a decision that would change the global financial system forever. They announced that Russia would be cut off from SWIFT, the Society for Worldwide Interbank Financial Telecommunication. This is the messaging system that connects 11,000 banks in 200 countries. It processes $5 trillion in transactions every single day. Cutting Russia off meant Russian banks couldn't send or receive international payments. No trade finance, no cross-border transactions, economic isolation. The West celebrated this as the nuclear option of financial sanctions. Russia would be crippled. The ruble would collapse. The economy would implode. Putin would be forced to withdraw from Ukraine or face revolution at home. But 2.5 years later, something unexpected happened. Russia didn't collapse, the ruble recovered. Russian trade continued, just not through SWIFT. Russia found alternatives. And worse for the West, dozens of other countries saw what happened and began building their own alternatives. Because if the US could cut Russia off from the global financial system for political reasons, it could cut off anyone. This wasn't the first time a dominant power weaponized financial infrastructure. It's happened 4 times in the last 110 years. And every single time, the same pattern played out. The dominant power controls the financial system and weaponizes that system to punish enemies. The targets find alternatives. Neutral countries hedge their bets. And the original weapon loses power. The dominant power thinks it's wielding ultimate leverage, but it's actually destroying the foundation of its own dominance. Let me show you the 4 historical examples. The 5-stage pattern that repeats every time. The exact data showing this is happening right now with SWIFT and the dollar. Why China is the obvious winner and why the timeline says the US has about 20 years before the dollar loses reserve currency status entirely. Because when Britain weaponized finance in 1914, it lost reserve status by 1944. 30 years, the US weaponized SWIFT in 2022. The clock is ticking, and this time, the decline will be faster because alternatives already exist, and technology accelerates everything. Before I show you how the SWIFT weapon backfired, you need to understand what SWIFT actually is and why it matters. SWIFT isn't a bank. It doesn't hold money. It doesn't transfer money. SWIFT is a messaging system. When Bank A in New York wants to send $1 million to Bank B in Tokyo, SWIFT transmits the secure message between them. The message says, Bank A authorizes transfer of $1 million to Bank B. The actual money moves through correspondent banking relationships. But SWIFT is the communication network that makes it possible. SWIFT was created in 1973 by 239 banks in 15 countries. Before SWIFT, international payments used telex, which was slow, insecure, and prone to errors. SWIFT's standardized messaging created security protocols and made cross-border transactions fast and reliable. By 1977, SWIFT was processing 10 million messages per year. By 2024, over 11 billion messages per year, about 45 million per day. SWIFT became the nervous system of global finance. And here's what makes SWIFT powerful. It's based in Belgium, technically neutral, but its board is dominated by American and European banks. And the US has legal leverage because most international transactions settle in dollars through New York banks. This means the US can pressure SWIFT to exclude countries or banks. If you're cut off from SWIFT, you can't easily conduct international trade. You're economically isolated. The US has used this weapon before. In 2012, the US pressured SWIFT to disconnect Iranian banks. This was devastating for Iran. Oil exports collapsed because buyers couldn't pay. Iran's economy contracted 9%. Inflation hit 45%. The sanctions forced Iran to negotiate, leading to the 2015 nuclear deal. The SWIFT weapon worked, or so it seemed. But Iran spent those years building alternative payment channels, barter arrangements, cryptocurrency, non-dollar trade with China, Russia, Turkey. When sanctions returned in 2018, Iran survived better because it had reduced SWIFT dependency. But the 2022 Russia cutoff was different. This wasn't a small country like Iran. This was the world's 11th largest economy, a major energy exporter, a nuclear power, and a permanent UN Security Council member. Cutting Russia off from SWIFT wasn't just economic warfare. It was a declaration that the US-controlled financial system could exclude anyone for political reasons. And every country watching understood the message. If you cross the US, you lose access to the global financial system. Your reserves can be frozen. Your banks can be isolated. Your economy can be strangled. This created an existential question for every non-Western country. Do you accept permanent vulnerability to US financial power, or do you build alternatives? Most chose to build alternatives, and that's when the SWIFT weapon backfired. Now, let me show you the 4 historical precedents, because financial weaponization always backfires. The pattern has repeated 4 times in the last century. Each time the dominant power thought it had ultimate leverage. Each time it accelerated its own decline. Example 1, Britain in World War I. Time worked 298. Before WWI, the British pound was the world's reserve currency. The City of London was the center of global finance. Britain controlled about 65% of international reserves. When war began in August 1914, Britain passed the Trading with the Enemy Act. This law allowed Britain to freeze assets of German nationals and companies. Britain seized German-owned businesses, bank accounts, ships, and property throughout the British Empire. This was unprecedented. International finance had always been separate from war. Belligerents fought on battlefields but honored financial contracts. Britain broke this norm. The immediate effect was devastating for Germany. German companies lost assets worldwide. German banks couldn't access London markets. German trade collapsed. Britain thought this gave them decisive advantage. But neutral countries watched and learned a dangerous lesson. If Britain could seize German assets, it could seize anyone's assets during any conflict Britain deemed important. Your money in London wasn't safe unless Britain approved of your government. After WWI, neutral countries began diversifying reserves away from London. They increased gold holdings. They established accounts in New York, Paris, and other financial centers. The US benefited enormously. New York banks gained business that previously went to London. By 1920, the US held more gold reserves than Britain. By 1925, New York rivaled London as a financial center. By 1944, at Bretton Woods, the dollar formally replaced the pound as the world's reserve currency. Britain's financial weaponization in 1914 started a 30-year decline from dominance to irrelevance. The pattern: Britain controlled the system. Britain weaponized it. Targets in neutral countries diversified away. Britain lost control. Example 2, United States and Iran, 1979. When Iranian revolutionaries took American hostages in November 1979, President Carter froze all Iranian assets in U.S. banks, about $12 billion, including $8 billion in bank deposits and $4 billion in other assets. This was the largest asset freeze in history at the time. The justification was clear. Iran had violated international law by taking hostages. The U.S. was defending its citizens. The freeze put pressure on Iran to release hostages. But the freeze had unintended consequences. Countries around the world, especially in the Middle East and OPEC, suddenly realized that dollar reserves held in U.S. banks could be seized. Not through military conquest, not through default, just through executive order. The president could freeze your assets with a phone call. Your sovereign wealth wasn't sovereign if it was in dollars in New York. In the 1980s, OPEC countries diversified reserves. They reduced dollar holdings from about 85% in 1977 to about 71% by 1991. They increased holdings of Deutsche Marks, yen, and gold. They established accounts in London, Zurich, and Singapore to avoid concentration in New York. Saudi Arabia, Kuwait, and UAE all reduced U.S. Treasury holdings. The dollar's share of global reserves began a slow decline that continues today. The Iranian freeze worked tactically. The hostages were released in January 1981, partly due to economic pressure. But strategically, the freeze taught the world that dollar reserves could be weaponized. Every country understood they needed to diversify. The U.S. gained leverage over Iran, but lost trust from everyone else. Example 3, United States and Russia, 2014. When Russia annexed Crimea in March 2014, the U.S. imposed targeted sanctions. Russian officials were banned from the U.S. financial system. Russian banks faced restrictions, but Russia wasn't cut off from SWIFT. The sanctions were calibrated enough to signal disapproval, but not enough to force Russia into full alternative systems. This was a mistake by the U.S. because it gave Russia 8 years to prepare. From 2014 to 2022, Russia systematically reduced dollar dependency. Russia cut U.S. Treasury holdings from $130 billion in 2013 to $2 billion by 2020. Russia increased gold reserves from 1,000 tons in 2014 to 2,300 tons by 2022. Russia developed SPFS, the System for Transfer of Financial Messages, its own version of SWIFT. Russia negotiated trade deals with China, India, and others that allowed payment in rubles, yuan, or rupees instead of dollars. Russia built infrastructure for non-dollar trade. Putin openly said in speeches from 2014 to 2022 that Russia was reducing dollar exposure because dollar reserves were unsafe. He explicitly said the US uses the dollar as a weapon, and Russia needed independence. Western analysts dismissed this as bluster. Russia was too integrated into the global economy. They can't decouple, but Russia was serious. And when the 2022 sanctions hit, Russia was ready. The 2014 sanctions worked partly. Russian economic growth slowed, investment fled. But the sanctions also gave Russia time and motivation to build alternatives. If the US had either done nothing or gone full SWIFT cutoff in 2014, the outcome would be different. Instead, the US chose a middle path that signaled intent but allowed preparation. This was the worst option. Example 4, United States and Russia, 2022. This is the big one. On February 26, 2022, the US and EU announced that major Russian banks would be cut off from SWIFT. Additionally, $300 billion in Russian central bank reserves held in Western financial institutions were frozen. This was the nuclear option. Russia was being financially isolated like never before. The immediate effect was dramatic. The ruble crashed 30% in 2 days. The Russian stock market closed to prevent collapse. ATMs ran out of cash as Russians panicked. Western media declared economic victory. Russia would collapse within months. But then something unexpected happened. Russia stabilized. The Russian central bank hiked interest rates to 20%, stopping the ruble's fall. Russia demanded that European countries pay for gas in rubles, creating artificial demand for the currency. The ruble recovered all its losses within 3 months. Russian trade continued, just not through Western channels. Russia redirected oil exports to China, India, and the Middle East. Russia settled trade in yuan, rupees, and rubles. By late 2022, the Russian economy had stabilized. By 2023, Russian GDP grew 3.6%, faster than Germany or the UK. But the real damage wasn't to Russia. The real damage was to the dollar and SWIFT, because every country watching understood that the US would freeze reserves and cut off SWIFT for political reasons. If you're China, India, Saudi Arabia, Brazil, you're thinking, we're not at war with the US today. But what if we have a dispute tomorrow? Taiwan, Kashmir, Yemen, trade policy, anything. Could the US freeze our $1 trillion in reserves? Cut us off from SWIFT? The answer is obviously yes. The precedent is set. So what did these countries do? Exactly what Britain's enemies did in 1914 and what Iran's allies did in 1979. They diversified away from the dollar and SWIFT. They built alternatives. And that's when the 5-stage backfire pattern began. Now let me show you the 5-stage framework. This is how financial weapons backfire. It's happened 4 times. It's happening right now. Stage 1, dominant power controls payment system. From 1973 to 2022, the US effectively controlled SWIFT. Not directly, SWIFT is based in Belgium, but because most SWIFT transactions settle in dollars through New York correspondent banks, the US has leverage. The Treasury Department can sanction banks. The Fed can cut off access to dollar clearing. SWIFT can't function without US cooperation, so the US controls SWIFT by controlling the dollar, and the dollar is the dominant currency because of US economic and military power. This is the foundation of financial dominance. Stage 2 weaponizes it for foreign policy. From 2001 to 2022, the US increasingly used financial sanctions. After 9/11, the US targeted terrorist financing. This expanded to rogue states, Iran, North Korea, then Russia in 2014. Each escalation normalized financial warfare. By 2022, when Russia invaded Ukraine, using the SWIFT weapon seemed obvious. The infrastructure existed, the precedent existed, the political will existed, so the US cut Russia off and froze $300 billion in reserves. Stage 3 targets find alternatives. Russia couldn't use SWIFT, so Russia used alternatives. SPFS, Russia's domestic system, expanded. CIPS, China's cross-border interbank payment system, became the main channel for Russian trade. Cryptocurrency for some transactions. Barter arrangements for others. By 2024, 40% of Russian trade was conducted in non-dollar currencies. Russia-China trade hit $240 billion in 2023, almost entirely in yuan and rubles. Russia-India trade largely in rupees. Russia-UAE trade in dirhams. Russia proved you can be cut off from SWIFT and the dollar system and survive. Stage 4, neutral countries hedge. This is the critical stage. It's not just Russia finding alternatives. It's dozens of countries that aren't sanctioned, but fear they might be someday. China saw what happened and accelerated de-dollarization. China reduced U.S. Treasury holdings from $1.3 trillion in 2013 to $775 billion by 2024. China increased gold reserves massively, officially 2,264 tons, but likely over 4,000 tons unofficially. China expanded CIPS from processing $300 billion in 2021 to over $500 billion by 2024. Saudi Arabia, a U.S. ally for 80 years, saw the reserves freeze and reconsidered its position. In March 2023, Saudi Arabia announced it would accept yuan for oil sales to China. This broke the 50-year petrodollar monopoly. In December 2024, Saudi Arabia joined BRICS, signaling a shift away from exclusive U.S. alignment. The UAE, another Gulf ally, began settling trade with India in rupees and dirhams, bypassing dollars. Brazil and Argentina negotiated a common currency for bilateral trade. The BRICS nations, now expanded to 9 members, including Saudi Arabia, UAE, Iran, Egypt, and Ethiopia, are developing a shared payment system and discussing a common currency backed by gold and commodities. Even U.S. allies are hedging. The EU developed INSTEX, an alternative payment mechanism initially to trade with Iran, but potentially expandable. Japan and South Korea are increasing yuan holdings and reserves. Over 50 central banks are now testing or implementing alternatives to dollar SWIFT dependence. This isn't because they're anti-American. It's because they saw $300 billion frozen with an executive order and realized their reserves aren't safe. Stage 5, the original weapon loses power. This is where we are now. SWIFT is still dominant, but declining. The dollar's share of global reserves has fallen from 71% in 1999 to 58% in 2024. That's a 13 percentage point drop, representing trillions in diversification. More importantly, the dollar's share of international trade settlement is declining from about 73% in 2022 to roughly 58% by 2024. That is a 15 percentage point drop in just 2 years. This is the fastest de-dollarization in history. SWIFT message volume is still growing in absolute terms, but SWIFT's share of international messages is declining. CIPS processed 136 million messages in 2023, up from 91 million in 2022. That is 50% growth in a single year. SPFS processes about 2 million messages per day domestically in Russia. India's Unified Payments Interface processed 12 billion transactions in 2024, including a growing cross-border volume. Alternative systems are scaling rapidly. And here is the key insight. The SWIFT weapon worked tactically in the short term, but strategically it failed. The Russian economy faced a shock, but Russia survived. And now, the SWIFT weapon can never be used again with the same effectiveness because potential targets expect it and prepare for it. Neutral countries have built alternatives so they are no longer vulnerable. This is the pattern. Stage 1, control the system. Stage 2, weaponize the system. Stage 3, targets find alternatives. Stage 4, neutral countries. Hedge stage 5, the weapon loses power. Britain went through this in 1914 to 1944. The United States is now going through it from 2022 to 2042. Now, let me show you the specific data proving this is happening right now. These are not predictions, these are facts. Russian trade data. In 2021, before sanctions, 87% of Russian trade was settled in dollars or euros. By 2024, only 60% is in dollars or euros. That means 40% is now in yuan, rubles, rupees, dirhams, and other currencies. Russia-China bilateral trade is $240 billion, almost entirely in yuan and rubles. Russia-India bilateral trade is $65 billion, largely in rupees. Russia is the test case proving you can operate outside the dollar SWIFT system. China's CIPS system. In 2020, CIPS processed about $12 trillion in payments for the full year. In 2023, about $27 trillion, more than double in 3 years. CIPS now connects over 400 financial institutions in 110 countries. It settles in yuan. This is a direct alternative to dollar SWIFT, and it is growing faster than SWIFT. Now look at central bank gold purchases. In 2022, central banks bought 136 tons of gold. In 2023, what's also 37 tons. In 2024, over 1,000 tons again. That is 3 consecutive years of 1,000 a plus ton purchases. The highest sustained buying since the 1970s, right before the collapse of Bretton Woods. Who was buying? China, Russia, Turkey, India, Poland, Singapore, the Czech Republic. These countries are converting dollar reserves into gold because gold cannot be frozen or sanctioned. Now look at bilateral currency swap agreements. China has currency swap agreements with over 40 countries, worth about $500 billion. These allow countries to settle trade in local currencies without using dollars. Russia has swap agreements with China, India, and Iran. India has swaps with UAE, Japan, and others. Brazil and Argentina are negotiating a common currency. ASEAN nations are discussing local currency settlement for intra-regional trade. All of this bypasses the dollar. Now the petrodollar breakdown. For 50 years, oil was priced and sold almost exclusively in dollars. This created structural dollar demand. But in 2023 and 2024, that monopoly ended. Saudi Arabia accepts yuan from China. Russia sells oil to India in rupees. UAE accepts dirhams in yuan. Iran sells to China in yuan. Iraq is negotiating yuan acceptance. The petrodollar is not dead, but it is no longer a monopoly. And once a monopoly breaks, its advantage disappears quickly. BRICS expansion and currency development. BRICS expanded from 5 to 9 members. These 9 countries represent 45% of the global population, 36% of global GDP, and 42% of global oil production. At the 2023 BRICS summit in Johannesburg, members announced development of a BRICS common currency backed by a basket of commodities, including gold, oil, and rare earths. It is not implemented yet, but the signal is clear. BRICS is building an alternative to the dollar system. The data is overwhelming. De-dollarization is not a future threat. It is happening right now, and it is accelerating. Every month, the dollar's share of reserves falls. Every quarter, CIPS volume grows. Every year, more trade settles in local currencies. The SWIFT weapon destroyed the dollar's monopoly. Now let me show you the timeline. How long does the US have before the dollar loses reserve status? We can estimate by looking at Britain's decline. In 1914, Britain weaponized finance by seizing German assets. In 1944, at Bretton Woods, the dollar formally replaced the pound as the reserve currency. That is 30 years from weaponization to replacement. But Britain also fought 2 world wars that devastated its economy. The financial weaponization alone didn't destroy the pound. It was weaponization plus war plus economic mismanagement. The United States is not fighting world wars, and its economy is still the largest in the world, so the decline may be slower. But modern technology accelerates everything. In 1914, building alternative payment systems took decades. In 2024, CIPS scaled from 12 trillion to 27 trillion in 3 years. Digital payment systems scale exponentially, so the decline may be faster. My estimate, based on historical patterns and current acceleration, is 15 to 25 years from 2022. That puts the loss of dollar dominance somewhere between 2037 and 2047, not eliminated entirely, but no longer dominant. The dollar's share of reserves falls from 58% today to perhaps 35-40% by 2040. Still significant, but no longer hegemonic. The euro might be 25%, the yen 20%, gold and others 15-20%. A multipolar currency world, the trajectory is already set. The dollar's share of reserves fell 13 percentage points from 1999 to 2024. That was in 25 years. At that rate, another 13 points gets us to 45% by 2049. But the rate is accelerating. The last 2 years alone saw a 4-point drop. If that continues, we reach 45% by 2035. So the timeline is 10 to 25 years. Not centuries, not generations. 1 or 2 decades. And here's what that means practically. Right now, the US can run unlimited budget deficits because the world needs dollars for trade and reserves. Foreign countries buy US Treasury bonds to acquire dollars. This allows the US to borrow $2 trillion per year at low interest rates. The US exports inflation through dollar dominance. But when the dollar's share of reserves falls below 40%, this advantage disappears. Foreign demand for treasuries collapses. US interest rates spike, budget deficits become impossible. The US must balance its budget or face severe inflation. The American standard of living, which depends on importing more than it exports and paying for it with printed dollars, becomes unsustainable. This is the end of the free lunch. Now, who wins and who loses? Who wins? China wins massively. China is the obvious successor to US financial dominance. It is the second largest economy, the largest manufacturing base, the largest trade volume, and an increasingly powerful currency. CIPS is China's SWIFT. The yuan is becoming a reserve currency. China holds massive gold reserves. Chinese tech companies, Alibaba, Tencent, provide payment infrastructure that rivals the West. As the dollar declines, the yuan rises. China doesn't need to defeat the US militarily. China simply needs to wait for the dollar to collapse under its own contradictions, accelerated by American financial weaponization. Russia wins strategically. Russia is smaller economically than China, but it proved you can survive a swift cutoff. That demonstration effect is critical. Every country that once feared US financial power now knows there's an alternative. Russia's survival destroyed the myth of US financial omnipotence. And Russia has strengthened ties with China, India, Iran, and others. It is no longer isolated. It has become a central player in an alternative bloc. BRICS nations win. Brazil, India, South Africa, plus new members like Saudi Arabia, UAE, Iran, Egypt, and Ethiopia. All benefit from a multipolar currency system. They gain leverage. They can play the US, China, and Europe against each other. They are no longer trapped in dollar dependence. India is a perfect example. India maintained relations with Russia despite US pressure. India bought Russian oil at a discount. India settled in rupees, and India faced no serious consequences. This is the future for middle powers. More autonomy, less US dominance. Gold also wins. When countries lose faith in fiat currencies, they buy gold. Central bank gold purchases are at a 50-year high. Alternative payment systems win. CIPS, SPFS, UPI, PIX in Brazil, crypto networks. Anything that allows non-dollar, non-SWIFT settlement gains market share. Financial technology companies in China, India, Russia, and the Global South benefit as countries diversify away from Western systems. Now, who loses? The United States loses hegemony. Not immediately, not catastrophically, but gradually and irreversibly. Dollar reserve status is the foundation of American power. It enables unlimited deficit spending, effective sanctions, and living beyond means. As dollar dominance fades, those privileges disappear. The US must balance its budget. Its military becomes unaffordable without endless borrowing. Living standards fall relative to the rest of the world. America does not become poor. It becomes normal. A large, rich country, but not a hyperpower. Europe also loses. European countries tied themselves to the US dollar system. They followed US sanctions. They froze Russian reserves. They cut Russia off from SWIFT. This aligned Europe with American policy, but also tied Europe to America's decline. The euro could have challenged the dollar, but Europe never pursued that path aggressively. Instead, Europe followed US leadership. As the dollar falls, the euro does not automatically rise. The yuan does, Europe becomes caught between the two powers. SWIFT itself loses relevance. SWIFT is based in Belgium, but it is viewed as a Western tool. As more countries diversify, they reduce reliance on SWIFT. It doesn't disappear, but it becomes one system among many instead of the dominant network. That erodes its business model, which depends on transaction volume and messaging dominance. Dollar holders lose wealth. Anyone holding dollar-denominated assets, treasury bonds, dollar deposits, US debt, faces gradual devaluation. Not hyperinflation, not overnight collapse, but persistent 5 to 10% real erosion per year through inflation and currency decline. A treasury bond paying 4%, while the currency loses 7% in real value, delivers a negative return. Investors flee to real assets, gold, and other currencies. That accelerates the dollar's decline. American consumers also lose purchasing power. The U.S. runs a trade deficit of about $800 billion per year. This has only been sustainable because the world accepts dollars. When that changes, the U.S. must export more or import less. That means fewer goods, higher prices, and lower living standards. Over time, Americans face 20 to 30% higher costs as the dollar loses its privileged position. The timeline is clear. The SWIFT weapon was used in 2022. That triggered the 5-stage backfire pattern. We are now in stage 4, neutral countries hedging. Stage 5, the loss of power, is beginning. By 2030, the dollar's share of reserves may fall to 50%. By 2040, perhaps 40%. The dollar may still be the largest single currency, but it will no longer dominate the system. Let me end with this. The SWIFT weapon looked powerful in February 2022. Russia was cut off, reserves were frozen, maximum pressure was applied, but financial weapons are like nuclear weapons. You can only use them once. After that, everyone builds a defense. Russia built alternatives. China accelerated CEPs. BRICS expanded. The petrodollar cracked. And now, the same weapon can never be used again with the same effect because its targets have built protection. The United States could have preserved dollar dominance through economic strength, free trade, and a rules-based system. Instead, it chose financial coercion, freezing assets, cutting countries off from SWIFT, using the dollar as a weapon. That worked against small countries, but against Russia, it backfired. And that backfire is now systemic. It is not just Russia moving away from the dollar. It is half the world. Britain weaponized finance in 1914 and lost reserve status by 1944. The United States weaponized SWIFT in 2022. The pattern says dollar dominance ends by around 2042, maybe sooner, because technology accelerates everything. This is not a prediction. This is pattern recognition. Financial weapons always backfire. The dominant power believes it is exerting ultimate leverage. In reality, it is teaching the world how to break free. Once alternatives exist, the original system loses its monopoly and its power. The SWIFT weapon destroyed SWIFT's dominance. The dollar weapon destroyed dollar hegemony. And the country that stands to benefit most is China, the patient rival that watched the United States dismantle its own advantage. China did not defeat the US militarily. It did not need to. The United States defeated itself by weaponizing the very tools that made it powerful. The 5 stages are complete: control, weaponization, adaptation, hedging, decline. This is the end of dollar hegemony, not with a bang, but with a whimper. Not through war, but through self-inflicted financial damage. February 2022 will one day be seen as the turning point. They just didn't know it yet.